Welcome. I am Courtney Austin with Austin Financial Tax, and I am here today with Sassan Zabeti, who is a certified CPA with Pangea Tax and Accounting. Today we're going to talk about what entrepreneurial accounting is, what that consists of, along with various tax topics and issues and upcoming challenges that people may face during this new economic time. So we're going to start off with what entrepreneurial accounting consists of. So Sassan, would you like to explain a little bit more?
Yeah. So entrepreneurial accounting really at the gist of it is not any different from particular accounting that people do to calculate their taxes, which is a large portion of business, but it's not all of it, and operation is a part of it. And so the difference comes down to type of client that we service. You know what I mean? Mm-hmm. Entrepreneurs do the same kind of accounting everybody else does. Mm-hmm. Accounting and taxation are generally composed of a couple of different components, like the individual with their taxes and liabilities and planning, and then also the entities, which we're going to talk about a little bit later. You mentioned that we're going to talk about that. So entrepreneurial accounting is really the focus of our work, that we're trying to help entrepreneurs take advantage of the laws in a legal way to leverage their cash flow in their favor rather than giving it to the government and waiting for the government to do. We know that government doesn't know how to use our money. They waste it, to say the least. As an accountant and a CPA, for years, I know when I call IRS, it takes me 2 hours to get on the phone with somebody. Mm-hmm. So I know my money's been wasted. So our philosophy, which is the backbone of what entrepreneurial accounting is, that we wanted to keep as much as money of our own money as possible and invest it the way we wanted to invest.
So with that, with entrepreneurial accounting, with all you said, does that also include financial counseling, like learning how to budget and maybe set savings goals or targets, or how to cut costs and how to expand revenue and things like that? Is that also included in entrepreneurial?
Yeah, I'm glad you asked that, because as you know, and we're telling our audience to know as well, is that we're taking a holistic approach to the accounting. So we don't stop as accounting and taxes. We incorporate operations in there and incorporate leveraging that money into investments. That's why in our firms, and you and I, as you know, we have accountants, we have lawyers, we have business leaders, we have enrolled agents, and we have experienced bookkeepers to help you achieve a holistic approach to your financial planning. In fact, in our company, we go a little bit further, as you know, because we believe entrepreneurs, they also need to be in shape.
Correct.
They need to go work out, right? So, but they need to plan for a legacy. So we go to the doctrine of wealth, health, and legacy is what we encompass. Now, financial planning and financial goal settings and all that other stuff is a component of that same idea. Mm-hmm. So yes, that's all incorporated in there. That's when it comes down, then we mentioned about the CFO services, and that's what encompasses all that.
Yes. So my next question, with COVID, obviously a lot of entrepreneurs were birthed, right? A lot of new business owners started businesses, LLCs, all this stuff, right? So I get posed the question often, how should I set up my business? Should I do an LLC, a C Corp, a S Corp? And I'm like, well, it depends on, what you're planning to do, right? I'll often tell people, start with an LLC. It's so many large companies out here that they don't know that's actually still LLCs. You're just kind of creating more work for yourself if you start off as S Corp, C Corp, So can you explain what's the best approach to start, and when is it good to switch from a LLC to a S Corp or a C Corp or a LLC with S Corp elections?
Okay, so let me just put out a quick description, the intention and intent of all these entities, okay, and with a little bit of historic background, right? So LLCs, LLPs are a kind of a new concept, okay, in the IRS code and also in the state codes, okay. So C corporations were originally the oldest one of all these, pretty much, I think. I'm not sure. But yes, I'm like 90% sure that the C corporations were first. The C corporations are designed to separate liabilities from the owners of the corporation. For example, General Motors is a C corporation. And if General Motors get sued, you and I, just because we have some shares of General Motors, we won't get sued. Nobody's going to come and grab our house because General Motors did something wrong. So corporations are completely separate entity from the individual owners. They are usually managed by the people who are managers. They may be shareholders also, but they're managers. The benefit of corporations are that they have unlimited life. For example, General Electric is over 100 years old. A lot of the owners of General Electric come and go. You can sell it as easily as you want. You can just go to the stock market and sell your share of General Electric, General Motors. So the ease of transfer of ownership is a benefit of the C corporation. Another very nice benefit of it is shielding from the liability we just mentioned a little bit earlier. Another benefit of the C corporation is that they have a latitude in investments and some benefits on there. However, C corporations have one problem. The problem with the C corporation is that they have double taxation. What that means is that once the C corporation double taxation, people are having a problem with the single taxation.
Yeah.
We're talking about double taxation.
That's scary.
Right? Yeah, it is. But it's scary as long as I'm not your CPA. So I can fix that. So the C corporation get the problem. What does it mean, double taxation? Double taxation means, as I mentioned earlier, that C corporation are a separate entity from you. So that when the C corporation makes money, they file their own taxes at the end of the year, and they pay their taxes.
Right.
But when they give you dividend as an owner, then you pay taxes
On the
dividend. So that's a double taxation.
Correct.
So that's been a problem with a lot of people. But in entrepreneurial accounting, we have ways to get around that, or said better,
Avoid it all the way together.
to take advantage of it, and we'll talk about tax strategies later. And I just wanted to mention at this point that our audience, anybody who's got questions, you can go to our website and send an email and ask a question, and we'll answer. We try to not give legal advice on this podcast because liability issues and all that. We'd be happy to address the questions individually toward our experts, our lawyers, or CPAs, or whoever they got over there. So that's a C corporation.
Okay.
Then later on, people came in and entrepreneurs come up and say, look, I don't want to pay this double taxation stuff, you know what I mean? But I do like the idea that I am separated and my liabilities are, the company's liabilities are not mine. So they come up with these statutes of limited liability companies, which is really kind of a hybrid between a C corporation and an individual. In a sense that at the LLC level, you are shielded from the liabilities of your properties. However, you are the only person that pays taxes. This LLC doesn't pay tax.
And it's a pass-through entity.
It's a pass-through entity, right? So it became very attractive for people to do the LLC. Now, one's going to ask me, or you will say, hey, look, but then S corporation, let me just say about S corporation. Then S corporation, which is a sub-S chapter corporation, the IRS code, came in and solved some of the problems of LLC in terms of categorization of income. Because if you're an LLC owner, you cannot give yourself a W-2 income.
Correct.
You can take the money out as a draw, but you cannot give yourself a W-2 income. Well, the problem with not giving yourself a W-2 income is retirement planning and some other stuff. And also, on an S corporation, you can shield yourself from a lot of self-employment taxes. I don't want to get too technical in here because it gets confusing. But as it's just so you know, as a side note, if you're self-employed,
You have to pay self-employment tax.
self-employed tax,
15.3%.
exactly. You pay. I know you do.
Yes, I have to explain that to so many people. Like, what is self-employment tax? You know, the Social Security and all that. You have to pay that. Your employer pays half, 7 point whatever, and you pay half.
Yeah.
So now you got to pay all of it when you're self-employed. You know,
Right.
so you have to explain that.
By the way, do you
concept.
get a lot of that from?
Oh yeah, absolutely. Because a lot of time, you know, it's a misconception, right? Well, I have a business, so I should write this off and this off and this off. Okay, even after we write this off, you still have a tax liability of this, you know. Well, why? Why is it something? Because you have self-employment tax and you have your federal tax obligation. Then you got to break down what the self-employment tax is, and you know. So yeah, a lot of people don't take that into account.
Yeah.
Which, you know, that's why you have to have a good tax planner or a tax person help you educate you on what's going on, what you're paying, why you're paying it, how to mitigate it, or how to plan for it moving forward. So that brings me to my next point. So CFO, Chief Financial Officer,
Yeah.
right? At what point, well, explain what a CFO actually does, and then also touch on at what point would a business need to consider appointing a CFO?
Okay, so chief financial officers, as you mentioned, their job is to obviously manage the finance of a corporation. You know, this could be a corporation or a company or a person of 5 employees or thousands. Okay, so and their job is to do 2 things. One is to protect the company from the liabilities that may rise from the financial transactions, and then also cash flow the company on an efficient way as a cash management. Those are the 2 cardinal purposes of CFO. And on the cash management aspect of it, there's an investment aspect that when you try to, where there's a company, like for example, like Elon Musk want to buy Twitter, right? He's going to go out there and talk to his people, to his financial people, and he says, well, look, is this going to be a good idea or not? They're going to sit down and run some projections, run some expenses, some feasibility studies, big diagrams, and summarize all those diagrams in one page for Mr. Musk to look at and say, well, look, this makes good deals, right? So that's what CFOs do. They get all these informations, projections, and look at the projects and say, well, this makes sense, so they make recommendation. That's what they do in the big companies. When the companies get smaller and smaller, maybe they don't have as much of that kind of stuff, or maybe they have those kind of stuff, but a little bit, maybe less zeros. You know, and instead of $44 billion, it would be like $44,000, right? Still money that they have to manage. So they manage the finances of a company. Now, what we find out, and there's a new emergent of the CFO services and CFO suites that's coming out right now, and that's because the large companies, you know, you got 100 and 150 employees and 200 employees, you can hire a CFO. CFOs are generally costing anywhere between 200 to 400, 500,000 or $1 million a year, and they have a whole team that support them. A lot of companies cannot afford that. They're right in the middle. So the sweet spot that we got are the ones that are from like 2-3 million or projecting to about 50 or 100 million. My largest client is at about $200 million of income. So they, not that they can't afford, but it's a lot more beneficial to them to outsource that CFO work to companies like ours.
Correct.
And the reason that we can get this thing done cheaper and more efficient because we allocate this works as a modules to a specialist to work on it, and then we as CFO services manage that work. So instead of bringing the company's resources to do, we leverage them. Like an assembly line, like, you know, the whole automobile industry was revolutionized when Ford assembled the assembly line, right? So sort of like that. That's what CFO service is. So when some client comes in, you know, we have clients that pay us a couple of $1,000s a month. We have some that pay more. and they come in there, and then we do their taxes. We do their bookkeeping, and we do their payroll. We look at their projects. We assess the projects. We advise them on that. So I got to mention one thing over here that's very important. And I'll tell this to my clients all the time, and I'll tell you that is the biggest mistake, the biggest misapprehension that people make in individual taxation or in a corporate taxation or entrepreneurial taxation is to think that taxation is one day a year situation. You know what I mean? Oh, it's tax day. No. Sweetheart, every day is a tax day.
Yes.
You pump gas, you pay taxes. You buy a sandwich, you pay taxes. You buy property, you pay taxes. You own home, you get taxes. You get sick, you go to hospital, you pay taxes.
Correct.
So you pay taxes all the time. So when our clients come to us, we tell them, look, whatever you've done in the past, we can't go fix it, maybe we can some adjustment. But the way we're going to save you money and get you ahead is by planning for the future, how we're going to use our resources and optimize. So that's what the CFO services does.
So are you saying that a company doesn't need to, or the indication of when they need a CFO, an official CFO, is when they reach a certain revenue target or threshold, or is it based on like the growth or the activity of the company, or is it a hybrid of both?
Hybrid of both.
Okay.
Yeah.
And if you're trying to grow?
If you definitely need a CFO.
Okay.
Yeah. And so usually the way that works is that, you know, it's just like the way they say you got to dress for the job you want. So in entrepreneur, in the corporate world, is the same way. You know what I mean? Like, you don't have to make millions of dollars to have a CFO services. I have people that I do CFO services for $400 a month, $300 a month, because their work is not a lot. They're like a little baby company. You know what's the difference between a baby company and a small company? Because a baby company is going to grow. A small company is a small company. I like to deal with baby companies. Help the baby company grow. And I'll tell them, I said, look, we are your best cheerleaders, because when you grow, I can charge you more. You see what I mean?
Yeah.
So yeah, it's about the growth, composition, and some of it also has to do with the fact that we want to be promoters of entrepreneurship, because I have personal reasons to support entrepreneurs, because I'm a refugee. So, and I know I came down from down to the bottom. I started from the bottom. Now I'm still in the bottom, right? But I'm trying, right? But it's that helping entrepreneurs grow. So it's not as much about money as you mentioned. Your objectives. You mentioned you notice I don't say goals. Your objectives are the same thing, right? And the one parameters that I can say is the most important to look at, that how planning for the growth, how important that is to you. You know what I mean? Because I've got a friend who's got a pizza place in Arlington. He is very comfortable with his pizza place. You know what I mean? He makes about $300,000-$400,000 a year. He's got his house over there. He's got his wife over here. He's got his kid in the college. Goes to his shop, open it. He doesn't want another pizza place. He don't care. He delivers the best pizza. Sometimes I delay 45 minutes to go have his pizza. His name is Mario Maldonado. If you want to check it out, Pizzioli's Pizza in Grand Prairie. I'm sorry, So he doesn't really need me as a CFO services. So I just do accounting stuff for him. You know what I mean? He doesn't think about buying another one. Yeah, but if he was the guy that said, hey, look, man, I'm thinking about growing this to another one and a second one, maybe add chicken wings, maybe add the bar, then he needs a CFO.
Yeah. Correct. So with company growth come like more money, more problems, right? So that's when you got to get creative and start having trusts and other ways to kind of like mitigate your exposure for legal action or legal protection and taxation shields and things like that. So at what point should business owners start to consider maybe building trust or having a nonprofit or holdings companies, things like that?
I'm so glad you said more money, more problem, because that brings me to your previous question, is that more money, more problem, that's when you need a CFO for those problems.
Yeah, for sure.
But okay, so Okay, so the function of the trust is to protect your wealth for your beneficiaries, for the future generations, for the simple word. So if you have a family and you're an entrepreneur and you're growing, you definitely need a trust for the people that they're going to probably need you, you know what I mean, if you're not here. As simple as you put out there. And some people may ask, well, that's what they got wills for. Well, there's a problem with wills. The problem with wills is that if you have a will, and, well, first of all, don't get me wrong. I'm going to get to this, but trusts are not just because of like inheritance and beneficiary. I'll get to that. That's one.
You have a living trust.
Yeah, a living trust. You know, so the trusts are so you can have beneficiaries and you can have stuff done for them outside of your power and outside of everybody's rich. Okay, because if you set up a trust. Okay, let me put it this way. You set up a trust so your visions can be carried forward without you. Whether it is a beneficiary of your children, whether it's a beneficiary of a hospital, beneficiary of a university, or beneficiary of your dog. It's for them. That's why there's a lot of companies making millions of dollars. All they do is just manage trusts, law firms and stuff like that. So at what point do you need to set up a trust is at the point that you feel that, okay, now I feel that I have a stuff that I want somebody else to make sure my vision is carried forward. That's why it's called a trust. And that's why the person who manages trust is called a trustee. Like I set up something, I say, I got this dog, I got cancer, I don't know what's going to happen. I want somebody to take care of this trust, and here's $5 million. Now you hire a trustee, and they do that. That's at that point. On the question of the not-for-profit, I think everybody should have a not-for-profit. And I'll tell you why. Because I don't trust government. And I'm a charitable person. I know you are.
Yeah.
So I wanted to do my own charity, but I don't want to have government to do it or United Ways. So I'm going to set up my own foundation, and I'm going to do my own donation, and I'm going to pay what I want to pay it.
Yeah.
It's like Rockefeller said, I don't want to own anything, but I want to control everything. And that's how you do. You don't own it, but you control it. Hey, take 100 jackets to this shelter. Let's feed these people. I'm gonna send $100,000 to Haiti. You're Oprah Winfrey. I got a school. I educate 5,000 children. I do it. It's my foundation. I'm Bill Gates. I have a foundation. I go over there to do X, Y, Z. I'm Warren Buffett. It's my foundation. They don't donate to the government. They don't give it to the United Way. Right.
Okay. Okay, so staying on topic of business owners. So, during COVID, we had a bunch of like relief programs through, what was it called?
Paycheck Protection Program or SBA?
No, it was called something. It was a name for it. It was CARES Act.
CARES Act.
Yeah, I don't know why I had a brain fart. So through the CARES Act, right, there was, so much money that was circulated
carelessly.
Claimed through like the EIDL, the PPP, and now the ERC, right? So a lot of those were forgiven. Well, what could be forgiven, a lot of people applied for forgiveness for it, right? So my question to you is, what would be your advice, or what documents would a business owner need in the event that the IRS came back and said, hey, we need to see proof, I know this was forgiven, but something doesn't look right, because a lot of times people were going to people, they didn't understand what was being prepared, they just know they wanted the money, right? Yeah. So what should people be prepared for in the event that this happens to them?
Yeah.
And who, if anybody, could help
So-
them out of this situation?
So you ask them what they need, huh?
Yeah.
So be serious on that question. So yes, like you said, the CARE Act gave away a lot of money carelessly.
That's a good one. Yeah.
So now they're going out and they're asking people for documentation to support their claims on application. Well, a lot of folks were legitimately got benefited from it, and I know a lot of people who that program saved their business. So I'm not hating on it too much. In fact, I don't hate it at all because the first wave of it really was necessary. But it's really tough because the documentation that they need are usually the income, payroll reports, and things like that. And if they mispresent any of those numbers, the government will find out. Because, as you know, a lot of those information has already been reported to IRS
Correct.
through the payroll programs and things like that. So it's going to be really difficult for them to lie to. I hope if somebody gets caught, I mean, there's going to be that application right there. If you really read that application, it says you are automatically on a criminal investigation and criminal prosecution if you did lie in those applications. So my advice to I don't know. You and I talked about it. I don't know. We decided that we don't really want to help. I mean, we don't want to get involved in that arena. I don't know. I know you don't either.
No, absolutely not.
But we've got enough other stuff that we have to do. But my advice is just go in there, find out your records, organize them. If you have that loan before they ask. That's really the best I can tell them, right? Just go get other stuff. Act like you're getting audited. I know you're not, but you could. So while the time is fresh, because you can always retrieve the information better when you're young, you know what I mean? Go get everything, payroll report or whatever you think they ask you. Usually, I can already tell you, it's probably a payroll report, your Form 940, 941 for the PPP loan, okay?
And bank statements.
Bank
right?
statements, right? And EFPTS, electronic fund transfer for the IRS, and your accountants probably know that. And my biggest recommendation is that don't try to do it yourself. Let some professional help you because it's complicated.
Right.
I don't even know all the details about it. So that's it. That's all you can say.
Right. So, continuing with the CARES Act, right? Under that act, they expanded the child tax credits. They expanded the daycare dependent credits. They expanded the earned income tax credit. They allowed you to take money from your 401k and spread the liability over 3 years. So this new tax season, those credits have expired, right? Everything is going back to normal. However, you still have 2 more years to claim those 401k distributions, right? A lot of my clients personally, and I know clients across the board, was taking out like 100,000, 150,000, 200,000, 60,000 worth of, their 401k. These are middle class people, right? Middle class we know gets like screwed the hardest, right? They get the worst and sick. So that first tax
It's like a middle child.
right. The first return was huge, right? Because they had all those extra credits plus, the taxes that they paid, all of that. Second return, this return now is going to be screwed. So, because they have to report that second, third, and those other credits have been decreased. So they are in a tough situation. Now, a lot of those middle income earners, right, are also entrepreneurs. Like they have a small business, a LLC that they may have made like $25,000, right? So my question to you, this year I know that the planning wasn't proper for it, so more than likely they'll be in an a situation where they owe. So going forward for the next year where they have to claim that last, round of disbursement from their 401k, how should they plan to minimize their tax liability so that they won't have that huge tax bill?
Well, so for any situation like that, I mean, when you going back at there's some kind of deferments or credit in the taxes and it's due, you owe the taxes. I don't know how they can get out of that, really. Maybe you can set up a payment plan or something in the future.
So maybe like doing additional quarterly payments throughout the year or
Oh, yeah.
estimated payments, or maybe if they have a job, increasing their withholdings of taxes.
Yeah, that's always a good idea. I mean, of course, 100%. You hit it right on the head, nail on the head. Because if you are anticipating to have large tax liability coming up, making payments throughout the year is the best idea, best advice. In fact, let me elaborate on that a little bit. And we're talking about, again, entrepreneurial accounting. And I recommend this to all our entrepreneurs to make sure that you make quarterly payment or payment to IRS estimated. It doesn't have to be quarterly. Quarterly they say IRS because that way it's more organized. But you can, every time you have an extra money, like you get a 1099 for 10 grand, just go ahead and send $4,000 to IRS at that moment because that's going to be the tax on it. You know what I mean? And at the end of the year, not only you get money back, whatever money you spend extra, because by the way, I'll tell you, IRS is the best saving account on the planet. If you want to put your money somewhere, cash money, put it in IRS because they pay higher interest than any bank. And on top of that, if you underpay the payment, as you know, the taxes, you get penalties and interest on the late payment of the money. So, and that interest and that late payment is going to be a lot more than you put in your money in the bank. So let IRS keep it. If it's too much, they give it you back. So that would be my recommendation. And as always is, pay IRS as much money as possible if you owe them money. And don't hesitate because the penalty I have got like many clients when we're trying to discussing, you know what I mean, if they want to be a client, and when I show them how much penalties they paid in past years just for not planning, like under withholding, you know what I mean, like you just mentioned. I mean, you just said the most important thing of this podcast is just like, look, if you think you're going to owe IRS, pay it now. If you have it, if you don't have the money, that's a different story. But if you have it, don't keep it. You know what I mean? Don't keep it in the mattress, or bank. Give it to IRS. If you give it too much, you give it back. Yeah.
So, okay. So, in addition to providing and advising people on tax services, both you and I share a common interest and a passion for educating people on wealth creation and how to budget and plan and just build wealth. So with that being said, I know you or we are planning on having a podcast named Open Letter to Ray Dalio. For those who don't know, Ray Dalio is an American billionaire investor who has a wealth of knowledge on investing and principles of wealth creation. So, Sassan, would you like to talk more?
Yeah, I want to talk about that, and we're going to talk about that together. And there's going to be 5 podcasts that are coming out, and we're going to name it Open Letter to Ray Dalio because it is an open letter that we're writing. And in his book, he's got several books, and the one that we're going to be concentrating on called Principles of Life and Business. And namely, Principles of Business is what we're going to concentrate on. So he talks about some of the principles that he used through his business, and he grew a very, very successful business. And he grew it out of a situation where it really was crumbling at multiple times in defeat. And he didn't think he's going to go the next day, but he built such a strong financial and such a high discipline and organization that I was really, really interested when I read about it. I said, well, I wanted to really know what this is going about. So at the beginning of the book, he said, these are my principles I'm going to outline. I encourage you to go to do your own principles, and that's one of the reasons that I like this book. Gave me sort of a guideline or a light that just kind of a look around and figure out what I want to do myself a little bit. So in this book, Principles, obviously he's got some principles he's talking about, and some of the principles that he has, I adapted. And so I use those principles, and I use some of the wisdoms and things that he said. Like one of the things that he said that resonated with me a lot was, don't be a phony. As simple as that is.
Don't be a phony.
Mm-hmm.
You know, that's very interesting because we live in a day and age where you got to fake it till you make it. You know,
Yeah.
everyone, especially social media wise, looks the part before they actually really get the part. You know, it's lifestyle marketing. People are marketing a lifestyle. Like, hey, you see my car, you see my jewelry, you see my clothes, you see I'm traveling, but they don't really have any assets or true wealth. So it's very, you know,
Yeah.
it's interesting. That
Okay, that's very interesting because, Mr. Dalio, and I don't know him personally, I would love to meet him, but I think what he means, he means about substance, I personally, all those people that make all those, 1 million followers because, there's from 1 million followers, that doesn't impress me, and I don't think that's what he meant because we're looking for substance, you know what I mean? He's talking about people like Dalai Lama, talking people like Muhammad Khan, like Mahatma Gandhi. So,
the intrinsic value.
yeah. So, like I told, that's a fundamental. Like, and it's interesting that I was talking to a friend of mine, and I said, look, I wanted to do some podcasts and things like this and speak about Jesus. And he said, well, no, man, you really want to be an influencer. Well, Jesus was the biggest influencer of all. He influenced 2,000 years of beliefs and all kinds of stuff, wars and all that. So what he said, like, don't be a phony. Really, I think what he meant was, don't be a phony to yourself. You be true to yourself, And I feel that is very, very, very beneficial to me when I was trying to overcome some addictions and things like this I was dealing with. That's a different sermons for a different day. But so I thought, and we talked about this, and if we're going to come over there, talk some of these principles that he has, and some of the principles that I and you and everybody else adapted to guide our things, it will be a good thing for people to know, but also it will be very beneficial to me as a person. And just so I'm being selfish here at this moment, is that it's going to make me accountable for the things I want to do because I'm going to talk about it and put it out there. So that's what the open letter to Ray Dalio is. And we're going to have 5 or 6 podcasts about that. And we're going to announce it, right, when it comes out,
What was another principle that touched home with you?
Well, don't be a phony. I don't think it was one of the principles. It was one of the things that he said.
The opening statement.
Yeah, another one that was like almost like a guidance. All right, and he said, you know what? And I really believe in this because I got to elaborate on it. He said, look, find 3 things that if you would do, change your life, and do it. Or find 3 things if you don't do, will improve your life. For me, to be honest with you, number 1 was alcohol. If I don't drink alcohol, I can accomplish a lot. Now, I'm not the loser by any means. Well, I guess maybe I am, according to my dad. But
No. We need a counseling session next.
yeah. So that was one. So I don't think it to myself, and it came to, and this was not very long ago. This was 3-4 years ago when I read this book, and I said, you know what I did? I said, look, if I want to be distracted, I found out why I drink all the time is because I got nothing else to do in the evenings, right? So I went to law school. That gives me homeworks every afternoon. You know what I mean? So that's what they helped me. So that was very important one. And then another one that he talked about a lot, and I really tried to implement in my life. He said, you know what? What we do all the times, we looked at the result at the first order consequences. Well, what's the first order consequences? Let's talk about drinking. If you're drinking, the first order consequences is that you feel good, you're drunk with your friends, you're having fun. What's the second order consequences?
Hangover.
Hangover.
DUI,
Yeah.
fights.
Yeah.
Yeah.
Third
Regret.
order third order consequences. Liver damage.
Health, long-term health effects.
So he said, look, step back a second. Remember that left or right turn I was talking about? When I'm sitting at that light, I'm thinking, okay, Ray Dalio, what are you thinking? First order consequences, making it right. Second order consequences, I'm making it left. By the way, Oh, I know what? I just saw on the social media that, for example, Lisa is going to be there, or Jeff or whatever, or they're going to be funny and they're going to have fun. First order consequences, second order consequences. I really love that about what he said. So I developed my principles too, and we're going to talk about it. And then I'm sure you got some stuff that's going to be that podcast.
So it sounds like this is not just business principles, but life principles
Yeah, the overlap.
for the most part.
Yeah.
Okay. So
Yeah.
what would you say is one of the largest, most commonly made mistakes that business owners, entrepreneurs do that kind of causes their business to decline or not grow?
So like the biggest mistake that entrepreneurs make to inhibit their growth.
Yes.
Okay, so setting goals.
Goals? I thought it was objectives.
Setting goals is the biggest problem they make.
Oh, okay. Okay.
I know a lot of people are going to raise their eyebrows over here. I'm wrong. A lot of people in the wrong way.
Yeah.
But here's why I say that. I say that for the shock factor. By setting goals is that, let me use happiness. Maybe talk about that a little bit, okay? So if your goal is to be happy, all right, and you're a business owner, I promise you will never be happy. Because what happens when you get to where you think you're going to be happy, then you're going to figure out that you're not happy. You're going to be more. You're going to be more. You're going to be more. The reason I say goal setting is dangerous, but I have an alternative for it. I don't say walk loosely and be lost. I say goal setting has a danger. The danger of goal setting is that it takes you away from day-to-day action. Even the ones that they tell you set goals, what they do is say, well, set up a goal like Dale Carnegie, and then say, okay, well, set up a goal that you want to be a millionaire by age 2023. Then you're going to say, okay, well, write a letter to yourself. That's what I learned in the school, setting goals. Dale Carnegie, write your goals down, put it in your pocket, read it every day. You know what? I'm about to turn 60. I don't know, for the second or third times.
Yeah. That's funny.
So I have never seen anybody do that for real. Not even the most successful people on the planet. I think you should set up incremental objectives that you achieve. I think happiness is a goal that will never be achieved, because once you're there, you're not there. I think the most miscoded thing about happiness is in our Declaration of Independence, because they say, because we have an inalienable right to life, liberty, and pursuit of happiness. Why does it have to be pursuit of happiness? Why can't it just be happiness? Why can't I just be happy? Every day I'll figure a way to be happy. You know what I mean? Every day that I wake up, there's going to be something that's going to make me happy. I'm not going to wait for tomorrow. So I think that's why. The reason I'm saying that's why business people failure, because the failure of a business is not because they're not making money. The failure of a business is the failure of the business owner that is not achieving its objectives. You know what I mean? Even Elon Musk, the richest man on the planet, he's miserable right now. Everybody's making fun of him. He's an idiot. He fired half of his staff and he hired them back. You know?
Yeah.
You know what I mean? Like, this guy is not a business manager. He falls back for in a couple of projects and he's a multi-billionaire.
Yeah.
Do you think he's happy? He's not. You know what? If I own his money, I wouldn't go buy fucking
Twitter.
You know, I would go try to liberate Kenya. You know what I mean? I would help the revolutionaries in Iran.
Yeah.
So here's what it is: the biggest failure of the business owners is not because they're failing of making money, but it is failing to make themselves happy. Because one of the things that we're going to talk about throughout this whole podcast that we have, and we're going to talk about it, you and I talked about it, is that we're going to try to look what are the true measurements of prosperity. To give you an example, we're going to close with this, is that the measure of the prosperity of a country is this gross domestic product,
Right.
GDP. Hey, we have a great year. We grew GDP, right? But we're not measuring the happiness of our people. We're not measuring the health of our people.
Right.
We're not measuring, we've got suicide everywhere, mass shootings everywhere, wars everywhere. But we're happy because we grew the GDP by 2% and polluted the environment and get our ass fatter and fatter.
Yeah. And
And then
violence is up.
violence is up.
Everything. Yeah.
We are measuring the prosperity with the wrong measurements. So a prosperous company, to our opinion, is not a company who makes a lot of money, but is a company who touches lives. A company
Makes
that
a difference.
Yes, makes a difference. Has employees who want to go to work. My employees, they don't have a clock schedule. They work their own schedule, every single one of them.
Right.
They come when they go. They have lunch every day. They come to my company, every single one of them, and breakfast in the morning. And I learned that from my father. My father was a principal of a school, and he fed every child in his school breakfast, and that thing permeated all over the world. So we're going to look at the true measurements of prosperity. That way we know if you're an entrepreneur, your accounting books got to look good, but the other things got to look good too.
Right. They say success is measured. Well, you earn success in direct proportion on, the amount that you contribute or you give.
Exactly.
So, yeah, the more you give, the more success you
Yeah.
So it's, you don't make money. You do activities that are fulfilling or that provides a valuable
Exactly.
service, and then the money is a byproduct of that.
Yeah.
So, yeah.
Yeah, and the Ray Dalio in his book says that his son was in China and trying to help some children with the cliff
Cliff Mouth.
mouth and stuff. And he said in American dollar it costs $500 to help a child. And I'm in China trying to help. I said, how many child can I help
In China?
in China?
But they got more money than us.
But they don't give it to their people. They don't give it to their
Crazy,
people.
right?
They don't give it to their people.
Yeah.
You know what I mean? But China is a superpower, but it's the poorest country on the planet.
Yeah.
You know what I mean? In terms of the poverty of the people, right? So he's going out there. He goes like, for me, $500 is a night out. I mean, it's even probably just a steak for him. But I'd rather take that $500 than help a child. I get a lot more out of it. You know what I mean? So that was the story on this.
What do you think?
And
Well, that's all for today's segment. We have to go. We're getting kicked out. But we'll be back.
Okay. That was great.